Embarking on your investment journey can be both exciting and challenging. Making informed decisions is crucial, so let's explore 2 good examples and 1 bad example of investments to guide beginners through this financial terrain. Good example 1. Diversified low-cost index funds. Consider investing in low-cost index funds, such as those tracking the S&P 500 or a global stock market index. These funds offer broad market exposure, mitigating the risk associated with individual stock picking. The low fees associated with index funds ensure a more significant portion of your returns stays in your pocket, making them a cost-effective and beginner-friendly option. Good example 2. Blue-chip dividend stocks. Blue-chip stocks represent well-established, financially sound companies with a history of stability. Investing in dividend-paying blue-chip stocks can provide a steady income stream, making them suitable for long-term investors. Companies like Apple, AAPL, and Johnson & Johnson, J&J, are examples of blue-chip stocks known for consistent performance and dividend payouts. Bad example 1. High-risk penny stocks. Penny stocks, often priced under $5 per share, may seem enticing due to the potential for massive returns. However, these stocks are highly volatile and susceptible to manipulation. Novice investors may fall victim to pump and dump schemes, where stock prices are artificially inflated before collapsing. Investing in penny stocks without thorough research poses a significant risk of financial loss. In conclusion, a well-rounded investment strategy involves diversification, research, and a focus on long-term goals. Opting for low-cost index funds and reputable blue-chip stocks provides a balanced and stable approach. Conversely, investing in high-risk penny stocks without proper knowledge can lead to financial pitfalls. Beginners should prioritize education, diversification, and a cautious approach to build a resilient investment portfolio. Let's hit the follow button to keep up to date with more financial topics. Finance, no worries. Subscribe now.